Good afternoon, everyone. Thank you so much for joining us today. I am glad to be with you all and talk a little bit more about home buying today. Some logistics before we get started with anything else. We've gone ahead and muted everyone on the call except for presenters. Hopefully this means that you can continue doing whatever you need to do during this time. Maybe that is making sure that you're eating some lunch or getting in a snack. Feel free to do those things while we are going through the presentation. We don't want this to stop any of the questions that you may have during this time. So I ask that you all, during this time, go to the questions feature. The questions feature will either be on the right-hand side of your screen or at the top-hand navigation. It depends on how you logged in today. But if through the questions feature, if you could possibly put in there where you are joining us from today, that would be wonderful. Number one, this helps me to know that you can hear me. And number two, it helps me to know that you know where the questions feature is. So where are you joining us from today? Someone's joining us from the hospital. Perfect, wonderful. Remote, Quincy from home, Boston, the hospital, Children's, great. Somerville, someone's joining us from Somerville, Everett. Perfect. Thank you all. This means that you logged on correctly. So you've done one amazing thing today. Yes, you definitely did this right. Somebody asked, but you did it right. I got your message. So you did it right. That's one good thing you can give yourself a pat on the back for today, for sure. So during this time together, we do ask that you submit questions throughout, and we may not get to them right away, because if we will possibly answer them in the future slides or anything of that nature, we don't want to skip ahead or anything like that. But go ahead and put your questions here if they do come up, and we're happy to answer those towards the end or during stopping points. The next thing on the list is that we are recording this presentation so that you will be able to watch it again if something comes up and you have a question about it, or maybe you need to just watch it again and see where somebody said something specific that you wanted to look at one more time. We're also going to be sharing the presentation. This will come to you in an email, probably tomorrow afternoon, so that you have access to these things. That is really important for us, that you have access to these even after today. We will be sharing a survey link with you all at the end. We do ask you take a couple of minutes to fill this out for us. It just helps us to get better at what we are doing and bring you more and more of these presentations. And we are so glad to be partnered with Boston Children's Hospital, the benefits office, to bring you these and this series. This has been a wonderful opportunity for us to get to know Boston Children's Hospital a little bit more. So if there are any presentations you are looking for on finances, please let us know in that survey. HUECU is Harvard University's not-for-profit financial institution. We exclusively serve the Harvard community and its affiliates, including all of you at Boston Children's Hospital. You all are eligible to become members of the credit union. We have everything that a bank has: credit cards, checking accounts, savings accounts, loans, but we believe we do it just a little bit better. We're able to have lower rates on loans, higher rates on savings through our members and through our owners. So that is wonderful. If you have any questions about membership with HUECU, we're happy to answer those as well. One thing I will say is that even if you don't live in the Boston area right now, we are accessible by mobile and online banking, so that is never an issue. And if you have any questions about membership or how we can help you with services, we're happy to answer those as well. One of the ways that we really support our community is through community involvement, through giving back. And our charity for the month of November, where we are matching miracles, happens to be Boston Children's Hospital. We are matching every donation that is made to Boston Children's Hospital through our giving link, which is on our homepage, huecu.org, and you can donate there. And if you're a member of the credit union already, you can also donate through online banking. You can just go to the CU for Kids widget in online banking. So we are glad to be with you all today, and we are glad to give back to the Boston Children's Hospital community as well. I'm going to go ahead and actually pass it over to Migdalia Gomez, who will be filling in for us for just a moment to talk more about home buying today for Michael Levine. So I'll go ahead and pass it over to you, Migdalia.
Thank you, Sarah, and thank you everyone for joining us today. And I do see that we have someone from our mortgage team on, so I just want to see, Rick, if you are able to unmute yourself, and if so, I can turn it over to you. While we wait to see if Rick is able to unmute himself, I'll tell you a little bit about what we're going to cover during today's presentation. So we're going to cover the home buying journey and all the different steps that are involved, a little bit about what exactly you need to do to qualify for mortgages, and then get to the details of the next steps as well. So we're going to start off just giving you a little bit of information about the credit union, specifically what we do when it comes to the home buying process. And every organization is a little bit different. All of you are eligible for membership at the credit union, but we want to give you information regardless of if you go with us or you go with another lender. The information that we're providing today is for anyone, regardless of which bank you go with. So the process of home buying more or less will be the same, and that's why we're focusing on education. Specifically, some of the things that make us a little bit different with how we process mortgages is we do have personalized service, meaning there are different, when you go for mortgage, you can go with different organizations, different companies, and some of which they are going to not necessarily connect you with one person. For us, we have a team of mortgage loan originators that we work with directly, so you'll be able to work with them. We sort of say 24/7. They are available during the weekends and evenings as well. And it is a digital process. I know a lot of folks, especially during these times, may not feel comfortable going to meet with someone and doing things in person. Just, you don't have to. If you're more comfortable with the digital process, that is something that is available to you through us. And then something else that we do that sets us apart is a little bit different, and we'll talk about a little bit more about the servicing process, is that we process our loans internally and do the servicing. That means that even once you have a loan with us, a mortgage with us, you'll have your mortgage with us you'll continue to contact us if you have questions. And that's something that has been very comforting and been very helpful. And, I myself had a mortgage with us at the credit union, and that really made it a lot easier, because if I had questions, I could just call and anyone internally could help. Sarah, if you don't mind going to the next slide, we'll get a little bit into the details of the home buying process. So right now, as we know, the home buying, I'll start off with the interest rates. I think that's probably the one that's the most relevant, because with the interest rates, we've noticed that they are historically low and they continue to be made. Oops, excuse me. And I just noticed, Sarah, I'm going to ask you if possible. I just noticed that one of our mortgage loan originators, Helen, is now on the webinar. I do see her, so I'm not sure if you could make her a presenter so that she can jump in. Oh, hi, Helen. Looks like you're on. Thank you.
Hi, Dahlia. Good afternoon, everyone. I'm Helen Lascaris. I'm one of the originators here at the Harvard Credit Union. And I think I'll just jump right in on the current real estate temperature in the market right now. So good news is that market conditions have changed since the spring. I'm sure many of you have heard friends or colleagues that were purchasing homes in the spring and were in bidding wars and lines down the street, to purchase a home, to view a home well over asking price. You may have gotten discouraged. I was speaking to a realtor yesterday who was telling me that that has changed quite a bit, that, you know, they're seeing even price reductions, people getting offers below the listing price, not everywhere, but you know, the market is moderating a little more. It's still, I would still say it's a seller's market because there isn't a lot of inventory, but it is getting a little more balanced. So that's really good news, especially for first-time home buyers that are putting a lower down payment. You can get an accepted offer in this environment. Interest rates are still very, very good. We're hovering, I would say, around 3% right now. Sometimes, you know, an eighth lower, so or you know, an eighth higher, depending on the day. But still extremely competitive historically, and a really good time right now to purchase. You know, it is expected that rates are going to slowly rise in 2022. I mean, we don't know definitely, but that's what we expect. And the inventory, of course, I just described. It depends on what you're looking for. I think a single family in the suburbs is going to be more competitive than maybe a condo in the city. So that's, you know, basically what's going on in the market right now. We talk to a lot of realtors, so we stay right on the pulse of it. So, you know, you could contact any of us, any of the originators here at the credit union, and we would be happy to, you know, connect you with someone or discuss the market with you. Let's go to the next slide. So where do you start? You know, people might be in different stages. Some people, it just might be a seed of an idea, where other people, your lease is expiring in 6 months and you want to get moving on it right away. So we recommend you talk to someone and get either a pre-qualification or a pre-approval. A pre-qualification does not involve a credit pull. It's basically a conversation that says, okay, here's your income, here's how much you have saved, these are your debts, what do you qualify for? It's just something in general that we're talking about. And that can be done at any time. You can make an appointment, you could walk in and talk to us, but you can't use that to go put an offer in on a property. So you need to take the step of pre-approval, where we're doing a hard credit pull, looking at your credit, incorporating that into the equation, and issuing a letter. And the letter is something you can use to put an offer in on a home. The pre-approvals are good for 90 days. We offer all, you know, types of mortgage products that you might be interested in, and we can certainly advise you, you know, in any way that we feel would benefit you. But there's a distinction. So the pre-approval, your credit is pulled, and you need to be aware that, you know, that could have it should have a very minor impact. The pre-approval is good for 90 days. So if you don't find anything, you know, we would have to renew it with another credit pull. We can give you a lot of letters during that 90-day period. And typically, we ask our borrowers, let us know the property you're interested in, so we could give you an estimate of what the payment will be. We can adjust the letter. It's not, you know, we give you the letter and see you for 90 days. We're working with you during that time. You might change. You might not find something in that price range and you want something more. What do I need to do to qualify for a higher price range? So we have all kinds of products too here at the credit union. And that little form you see on the screen is our express pre-approval form. So you fill in some information. It doesn't pull credit or anything, but it just notifies us this person is requesting a call to review and get a pre-approval, or maybe a pre-qual, but it is for pre-approval. We want you to agree you want your credit pulled when you take that step. But for the pre-qual, I recommend making an appointment and talking with someone. And people have told me they found it very beneficial, because if you don't have an idea of what you qualify for, you might be looking at things that just are not, you know, are not in your price range, or you might have a higher price range than you think. You know, what's your monthly payment? That's a big deal, and a big component is what you're paying in rent now versus what this payment looks like, and looking at your budget, etc. So let's go on to the next. We also we partner with GreenPath. That's Medalia's, knows a lot more on that, but they are there to help you with budgeting. You know, if your credit's not where it needs to be, what do you need to do to get it where it needs to be, etc. So GreenPath is a resource available to you, to all our members, free of charge. and they have a lot of good programs. So that's the path if you want to, look up their services and how they can be assist in this process too. So let's go on, and it's all, the links are all on our website. So when you're looking at identifying a property, what are you going to look at? Everybody has different criteria. Of course, location is crucial. What property type are you looking for? What features do you want? So a realtor is an important partner in this journey, but you have to give them some direction. When we're running through calculations, you might get a little bit bummed out that I can't afford a house in Melrose with this price. So what are you going to do? Are you going to look at other communities that are a little more affordable near Melrose? Or, if you want a certain type of house, you might have to expand your search. So those are the types of decisions that you'll be going through. But it's really important for you to think about what you have to have in that property and what you can live without. I want 2-bed, 2-bath, but if it had 1.5 baths and everything else was perfect, I'm okay with that. Or different features that you want or that you need, because the realtor will help you maybe think of different communities that you aren't really focused on right now, etc. So you need to think about that. And I would put a search on, look on one of the online resources like either Zillow, Redfin, and just kind of peruse homes in the price range that say we've developed when we've had the pre-qual phone call, and that'll help you see what's available in that price range. What are you not getting that you need? You need a garage, you're not seeing it. You might have to look further out, etc. So let's say we go through the pre-approval, you find a place, now what do? What are the next steps? So you need to assemble your team. The key players on your team are going to be your lender, hopefully the credit union, your agent, and your attorney. So I want to talk a little about what you need in each team member that's going to take the stress away from you, because it is a stressful process. It's probably the biggest purchase you'll make in your lifetime. So for the lender, you want a lender that has a good product menu, that has a lot of available products. You want a loan officer that is going to be available nights, weekends, because a lot of times these things come up quickly and you need the pre-approval at odd hours, not business hours. We're available 7 days a week, all of us. And you want service. During the process, you're going to have a lot of questions, and you want to be able to reach out to your loan officer and get answers to those questions. And we're here, and part of our our goal is to help you really understand everything in terms of on the loan side. Now, for a realtor, you should ask friends, you should ask family who they used as a realtor. You want someone that's based in the communities that you're interested in, someone who's a full-time realtor, not who's doing it part-time, and someone who's got a lot of experience. So you want to interview them. Ask, how many listing is acting as the agent for the seller did you have last year? How many buyers did you represent? What communities were your transactions in? And then you kind of get a feel for that person, whether you think it's a good fit for you. You ask them to take you to show you some properties too, and see, are they showing you things that you like, that you've told them you liked, or are they really off the track with you? They might be really pushy. Some people like that, some people don't. So you want to have a good fit for your realtor, because that person's going to be working with you a lot. And then after you get the property under agreement, you do need an attorney. We have attorneys that we can recommend to you. Your realtor will have a recommendation. And again, you want a real estate attorney, not an attorney that does all other types of legal work. And you want someone that's going to also be accessible to you and that has reasonable costs. And you can ask the attorney, what are your costs? Our attorneys that we work with a lot have very reasonable closing costs. Let's go on to the next. So you've assembled your team, and then what happens? Let's say you're going to make an offer. So the realtor is going to present the offer, and you're going to give $1,000, which is a good faith deposit. Some people are giving more to show, I really want this. I want to give a stronger deposit. And you're going to state when you're going to close. You're going to state you're going to get a mortgage, how much you're going to get a mortgage for, whether you're going to do an inspection, And there will be an appraisal done by the lender. That's an independent appraisal that we do. And all that's going to be in there. Now, in the hot market, people were waiving their mortgage contingencies, which means they put that deposit at risk. And we don't recommend that at all, but people were doing it because other people were doing it and getting accepted offers. Waiving inspection, which we also don't recommend. I mean, we don't recommend these things, but practically people have done them. I don't recommend that you waive either of those. You need to do a full inspection of the property. After your offer is accepted, within 5 days, you have to do an inspection. They're going to check the roof. They're going to check the systems. They're going to open all the windows, check everything to make sure that there's nothing that's not in working order that you weren't aware of that could be a cost to you that you didn't factor into your offer. And then you're going to also state your closing date. You want that offer responded to within 24 hours or 12 hours. It's not something that they can sit on and wait. So it's time is of the essence on your offer. And if you have an accepted offer, then within 10 days, you're going to have the second piece, which is the purchase and sale contract. That's where the attorney comes in. They're going to create this contract with the seller's attorney. You're going to be required to give a second deposit, usually 5%. I mean, if you're only putting 3% down, then the second deposit will be less. And that contract is going to have all the terms in the offer, the mortgage contingency, the appraisal contingency, if there is one, and all that will be in there specified. So if for some reason you get denied for the loan, if you have the contract with a mortgage contingency, you get your deposits back. So the people that were waiving these things, if something happened, they lose their deposits. And that's devastating if you've saved for several years to that 3 or 5% down. So you really don't want to do that. And you know, the market is moderating, so you're not going to need to do that. So let's go to the next. So
Helen, before we go on to the next, we have had a good amount of questions that have come in.
okay.
So I'll just take a moment, give you a little water break moment as well as I ask these. So some of the questions that have come in, how do you know an inspector is going to find everything?
Really, you don't. I mean, the inspector's job is really to look at all the systems. They're going to turn the heat on. They're going to turn the air conditioning on. They're going to run the water. They're going to open the windows. They're going to look at the roof. They're going to, look at the foundation. I don't think they go up on the roof. I think it's a visual inspection. Most of the housing stock here is old. So, it's not that it's going to be perfect, but can you live with it? There's no guarantee they're going to find everything. And they're going to tell you that too, that we're not guaranteeing this house is perfect. They'll say the roof's about 7 years old. The boiler is about X years old. But they're going to look at the main things that are going to be expensive to fix. So there's no guarantee. But if you get a good inspector, you kind of vet out the inspector. You want to get someone that has a good reputation. Like we recommend Tiger. They're very thorough and our members have been happy. But that's another, you do your due diligence on all the parties that are going to be involved. But that's a good question.
Thank you.
But
someone else asked, who selects the inspector and how do you trust that inspector is reasonable? I think you just addressed that, so I'll move on to the next.
But I want to just say one thing. Right after you have an accepted offer, you select your inspector. It's about $500 to $700. It's about a 4 to 5 hour inspection typically, and you're going to take the day off from work and be with the inspector as they're going through the house. So you can ask questions. I mean, they won't give you answers like how much would it cost to redo my kitchen. They don't give like contractor estimates or things like that. And it doesn't include like a termite inspection. If you can get even additional inspections, but the main inspection, you're there. So you can ask a lot of questions. So that's good. The appraisal is a different animal. That's the lender is ordering that. You don't attend the appraisal. You get a copy of it, but the appraisal is different. The appraisal is just looking at other properties that sold and saying, what is this property worth? It's not looking at the really in detail all the systems of the property. So, the realtor's going to have an inspector. Personally, I would get my own independently. Ask friends who they used. You can do some research online. use our recommendation to get a really good home inspector.
Thank you, Helen. Another question that came in, we have a couple here. I have 4 more questions. Are realtor costs variable or typically a percentage of the purchase price?
That's a very good question. So the realtor's commissions are paid by the seller. Typically, it's 5% or so, and they split it between your agent's gonna and their company get 2.5%, and the seller's agent and company get 2.5%. But that's paid by the seller, so you don't have to pay the realtor. You're not paying the realtor.
Someone asked, how much will multiple pre-approval credit checks affect credit score?
Well, keep in mind, so if we pull it once and it's good for 90 days, if we give you additional letters within the 90-day period, we're not going to keep pulling your credit every time. If you say get pre-approvals from multiple lenders, I mean, you don't have to do that, but say if you did, any pre-approval pulled within 30 days of the initial one only will count as one inquiry. So September 1st, let's say you get a pre-approval, and then you get a few other ones during September. That should count as one, not several. But after 30 days, if you do it, it will count as another. It should not have much of an impact if you have a long credit history. If your credit is very thin, meaning you don't have a lot on there, the inquiries are going to hurt you more. So we be careful. I mean, you have to have the credit pull again to reissue pre-approvals. But you just, if let's say you decide to pause in your home search, let's not redo the pre-approval right after 90 days. We can wait. It should not have a major impact for most people. It should be minor, 5 points, maybe 10.
Okay, and I'm going to take a couple more, and then I know the questions are going to continue coming in, so we'll leave time for those at the end.
Okay.
There were a couple of questions that came in that I want to address about being eligible for membership. So someone asked if they're not benefit eligible at Boston Children's or HMS. We'll put in the chat who is eligible, as long as you have a Harvard ID, a BCH ID, work at a Harvard affiliate, or are a family member of someone that is an HUECU member, you are able to join. And another question, and I think the last one, and then I'll turn it back to you, Helen, so we can continue, because I don't even think we're halfway through. We have a lot of more content. Someone asked, can we schedule a home qualification meeting even without being members of the credit union?
Yes, as long as we know you're eligible to be a member, we're happy to talk with you. I mean, if you're not eligible, then what if you love it? We can't work with you. And your family, if you are eligible, your immediate family is also eligible. So as long as you're working at one of these employers, so we know you're eligible, we're happy to have the conversation. We welcome it, and we hope you will reach out to us. Migdalia?
Thank you, Helen. I'll turn it over to you to continue with the session.
Okay, so you got your offer accepted, you've assembled your team, you've got your attorney, you've got your realtor, you've chosen your lender, or you're getting ready to pick a lender. Just because I did your pre-approval, when it's time to finance, you could go to another lender. Most people don't, but you could. So there's an item called a loan estimate. It's a 2-page document, actually it's a 4-page document, that itemizes the interest rate, the APR, all the costs associated with the transaction. And you want to obtain that when you're comparing lenders. Someone could have a great rate, but it's loaded with so many fees that it really isn't as great as it appears. So you want to, do your due diligence, get your loan estimates, and then when you find the lender that you want to work with, which hopefully will be the credit union, you would submit your application and lock in your rate. Typical rate locks are 60 days. Usually a home transaction is closing within 60 days. So there's usually not an issue unless it's new construction, then that's a little different. We have to strategize on that. So you obtain your loan estimates from your different lenders. At this point, they're going to be pulling your credit lenders to give you a loan estimate. The credit union, we give everyone the same rate. So I could quote you a rate without re-pulling your credit if you ask me for a rate. we give everyone the same rate provided that they qualify. So then you're going to submit your application at your lender of choice. You're going to lock your rate, and that rate will be locked for 60 days. And then we're going to go into the mortgage process. So do's and don'ts, you're going to be asked to provide a lot of documentation, income and asset documentation. Right away, you're going to be preparing and providing these documents within 5 days. We're going to order an appraisal to be done of the property. Then we're going to review, when the appraisal comes back, we're going to review everything. This is in a nutshell: issue your approval and then prepare for closing. Two very important things not to do during the loan process. Do not apply for any new credit, and don't increase your debts. Don't buy furniture, don't get a new car. I mean, if you really have to, you let us know. We can see, yeah, it looks like the debt ratio is still going to work, but you don't want any changes when you submit your loan application from your profile when we pre-approved. But if there is a change, keep in touch with your loan officer. But as a rule of thumb, we don't want any new credit and no escalating credit card debt or new debt. So let's go on to the next. So your loan is approved. We have the closing date set. You're going to be given final figures. And that loan estimate I mentioned that you're going to get in the beginning, the final figures should be very close to that. We're not allowed to just change it at the end. There's rules around that. So you're going to be given final figures. You're going to know, you're going to send that money to the attorney's office, holds all the funds. So you're going to be told to get that money to the attorney, whatever you owe for the end, which would be closing costs, maybe additional money from the down payment. Your realtor and you are going to walk through the property the morning of the closing or the night before to make sure that everything's in order at the home, that nothing was damaged when they moved out, that they have moved out and didn't leave stuff, or if they're supposed to leave something, that it's there. And that's what the day of the closing, that's what's going to happen. And let's go to the next. And at the closing, you're going to be signing a lot of paperwork, and then the keys, you're going to go on record. It's going to be, your deed will be recorded, and then you're given the keys to your new home, and that's it. So, it's really a lot of information I've given you right now, and you're probably overwhelmed, and don't be. If you retain any of it today, it's a win. It takes time to get used to this and the whole process, and don't have that expectation and don't get scared away from it because this seems overwhelming. We take it step by step, small bites. So this is just a roadmap of just everything we've talked about. So when you're ready, you're going to get the pre-approval, which means you're ready to buy. If you see the house tomorrow, you have the letter to put an offer in. You're going to submit your pre-approval. You get an accepted offer. We're going to execute the documents with your attorney, submit your application, lock your rate, provide the information, look at the loan estimates to make sure that everything is the way you want it, and then we're going to submit it. And let's go to the next. Approve the application, look at the income, look at your assets, give you your mortgage commitment, and then you're going to close. You're going to get the final disclosure that mirrors the loan estimate, and you're going to know how much you owe. It's not going to be a surprise. I know in the old, previously it wasn't as regulated, so people were getting surprised by additional costs at the end. That's not going to happen. You're going to know it all up front. And you're going to have that closing disclosure, which is the document with all the final costs. And let's go to the next. And, this is a link to our home loan website. We have a lot of information for first-time home buyers. We give an 1/8 off our rate to first-time home buyers and an additional $500 off of closing costs. We discount the legal fee by $150. We give you a very high-touch experience and an education as you go through this process with us. And there's a lot of information on our website. In addition to us as a resource, we welcome you to reach out to us. We're happy to talk with you about the home buying process. And this is my team. I'm Helen, Mike, Ryan, Daisy, and Sharon. We're all available to you. You could reach out to us by email you want to meet us in person, we can arrange that too. We can do a Zoom meeting if that's what you'd like. And I think, you know, let us know what you thought of the webinar on a survey. And I think Migdalia is going to handle that. Are there any other questions, Migdalia?
Yes, we've had a lot of good questions that have come in. One of the things I love about Helen is that she's so detailed, and keep having these questions coming. I'm sure we'll address all of them. Before we open it up for questions, I did put in the chat the survey link. It is very helpful for us. This is a new exciting partnership with us at Children, and we want to continue bringing these presentations and other ones to you. So if you do have any feedback, please let us know in the survey. And in the next slide, we do want to also let you know we currently have a referral campaign. So I know a couple of folks asked about membership. If you already know someone who's a member, if they refer you, you both will have $50 that will be deposited into your account. And we're also making a $5 donation to a charity during the month of November. That is to the Children's Miracle Network, which benefits Boston Children's. And during the month of December, it will be for the Massachusetts Home Coalition for the Homeless. And I'm gonna just go to the questions now. If you do have any additional questions, you can keep in touch, but I'll just jump into the questions right now. So we have a good amount of them, and keep them coming. If we run out of time, we'll just reach out afterwards. When I am ready to make an offer, how can I as a buyer stand out from other strong offers?
Well, you know, you as a buyer can try to find out through your realtor what the sellers are looking for. Do they want to close in 30 days? Do they want to close in 45 days? So you could try to accommodate their timeline. You could let them rent back from you up to 60 days. I don't, you know, they're going to want you to waive your inspection or waive, you know, your appraisal or your mortgage. I don't recommend that, but you could say, well, I'm going to do an inspection, but if anything is found that's under $2,000 to fix, I'm not going to come back to you and try and renegotiate. You can also, you know, write a letter to the seller about why you would like to purchase that home. I mean, those have been a little more scrutinized lately, but you could do that too. So trying to find out a little about the seller through your realtor and seeing what you can do to meet their needs. It's not always the highest price. If you can accommodate the date they want, or something about you really touches them, that they've loved their home for 30 years and they want someone else who's going to love it. If you have a commonality with them that you can find out, that's something you can try and leverage. So those are the types of things that I would recommend that you do to stand out.
If we are currently working and become a member and then not working with Harvard, is my membership canceled?
No, once you're a member, you're always a member. So you have to join while you're at the eligible employer. Of course, if you went to Harvard, then you're always eligible because you're an alumni. So that's a little easier. But you know, for someone, if they just delay joining, but you have to join while you're at the employer. And once you become a member, you can remain a member even if you leave the employer. And we have the technology. Really, we don't right now offer nationwide mortgage loans, but we're looking to do that in the coming years. So, you know, even if you move away, we still might be able in the future to assist you with your mortgage. And a lot of our other products and services are available nationwide too. So there's a benefit to it, even if you're not going to be in this area down the line on the membership.
Does the walkthrough happen with the previous owner?
No, the walkthrough is at the end. You go with your realtor. The owner's no. And when you're looking at a house, the owner's not supposed to be there. You know, you might make some comments that they might not like, or you know, they're not supposed to be at the showings at all. You really wouldn't have any contact with the owner unless you bought it directly from them and didn't have a realtor.
Will a job change affect the buying process?
It could. So that's a good question. So if you change your job and you go to a higher paying job, that's a good thing. if you have a gap in employment, it could be an issue. If you have, several months where you're not working, we're going to be looking for you to be working when you get the mortgage. In most cases, there are some cases, where we could work with a job offer if it's your first job or things like that. But if you're someone who makes overtime at the current job, overtime, nights and weekends, if you change jobs, we want to see a 2-year history on that type of income, commission, overtime, bonus, in order to use it. So if you go to a new job, all that overtime you had at your old job probably is not going to be able to be considered because now you're at a new job. So it's okay. I've had people change jobs during the mortgage process. It just happened that way. They got a great offer, and that's fine. But as long as you're starting before the loan closes, we have a first pay stub, and there's some other exceptions. So if that's your situation, let me know, and I can let you know what the specifics are for you. But the one key is a lot of people were not able to use their overtime if they change jobs until they've been in the new job for a couple of years.
Thanks, Alan. We have about 15 minutes and we have about 10 questions. I know some additional ones may come on, and then I think Wendy from Boston Children's may want to say something. So just giving a little time check there, but I'll keep with the questions. At what point can you pull out and not lose the down payment?
Once you sign you can, I think, get out at the offer. You make the offer, you give $1,000. If you decide you don't like the inspection or whatever, I think you can get out. Once you sign the purchase and sale, that money is at risk unless you get denied for the mortgage for whatever reason. But we can't deny you because you don't want the house anymore. Oh, I saw something else that's happened. I saw something better I liked. I don't want to buy this house. We could only deny you if you're not qualified. Once you sign the purchase and sale, you're bound, and your money is at risk unless you get denied for the loan. There really isn't any other way that you could get out. So, and that would happen probably when you make your offer, you have the date that you're going to sign that purchase and sale. It's probably around 10 days after you have the accepted offer. So you're in there and you're bound. So you want to have a good attorney. You want to really know you want to move forward.
Who sets the turnaround time if something is found during the inspection?
Turnaround time to fix it? Well, it depends on what it is. A lot of times it will be put into the purchase and sale. You'll add it in. Seller states that they're going to, the air conditioning wasn't working at inspection. Seller states they're going to repair it prior to closing. And then we would want you would probably go out with your realtor to confirm that it's working prior to closing, and we would want a letter from you stating that it's working. Everything has to be in the purchase and sale. You don't just take a verbal, oh yeah, we'll fix it. So it depends on what it is and when they'll repair it. So that's, we handle it like that. You have it in the P&S and then we verify it's been done before we close.
I had a few questions that came in about PMI. Ultimately, could you talk about PMI? I usually hear 20% is expected.
No. So that's a good question. PMI is private mortgage insurance. And when you put less than 20% down, and our first time home buyer, we could do with 3% down, depending on the loan amount. A jumbo loan, we need more. But, for most people, the limits are coming out for next year up to $625,000 in most counties around Boston is not going to be a jumbo loan. They can be done with 3% down for a first time home buyer. So PMI is an additional monthly insurance payment that you're going to have if you put less than 20% down. If you put 10% down, we have another option to avoid PMI, which is a piggyback loan. And I could talk to you about that individually if you're interested in it. But so the PMI payment is a monthly payment that's going to be on the loan for a certain number of years if you do nothing. So you can remove it early. Then its scheduled date. So if you put 3% down, it's likely going to be on your loan for 8 to 9 years. After 2 years, you can ask for it to be removed if your equity position has increased. Guess what? This year, a ton of people have gotten rid of their PMI because the appreciation has been so much in the past 2 years, and they're saving $200 to $300 a month on eliminating PMI. it depends on how much your premium would be, depends on your credit, the loan amount, and the amount of the down payment. Those are the three levers. So credit is crucial. For really good credit, you're going to have a very reasonable PMI payment. If your credit's not really outstanding and you have a low down payment, you know, depending on your loan amount, you could be looking at a little higher PMI. I can give you an estimate based on your particulars. We have a calculator on PMI. I don't, you know, at this point, we don't have a lot of first timers putting 20% down because the prices have gotten so high. Don't let PMI prevent you from moving forward. You don't need 20% down to buy a home. You can consider buying with less than 20% with as little as 3%. In a hot market, it's going to be hard to get an accepted offer with 3% if other people have higher down payment amounts. So that's, you know, what PMI is. It protects us in case you default. It protects that 20%. The insurance company is going to come in and give us that amount, so that if we had to foreclose, which we never have on anyone, that we would be guaranteed we get our principal back. So that's the, you know, what PMI is about.
Are you seeing more young professionals buy in the city? How can we make that work in a competitive market with expensive costs?
I am seeing a lot of young professionals buy in the city. You know, I'm located here and I'm on Fruit Street right now, so there's a lot of people on Beacon Hill. You know, people are being creative. They're sometimes going in with another person, buying a 2-bedroom condo with, you know, not a partner, but a friend or something, and then figuring we'll live here for 5 years, then we'll sell and go our separate ways. But at least we're owning something rather than paying a really high rent and not getting something back for it. You know, that's one thing that people are doing. But people are buying in the city. You know, I don't know what else I could say about that. We do have a lot. People are looking a little further out, like Quincy, Malden, someplace where they're close to the city. They're by the public transportation, but a little more affordable too.
Thank you. And we had a couple questions that I'll take a moment and just answer these. Someone asked, are we affiliated with other credit unions? They're from New York and they want to transfer funds. So we do have what's known shared branch network, and I just put that in the chat for you. So as part of our credit union, you can bank with us as if you were with your credit union. However, that does not mean that you have a membership with us. So if you in the future were no longer working on Boston Children's and didn't have that Harvard connection, you would not be able to open an account. Someone else said that they do not need a mortgage now, but are looking in the future. Can I lock in a membership now by opening a savings account? Yes, you can. You do not have to be an employee at the time of opening a mortgage, which was a follow-up question. Once you're a member for life, and those in your household, those in your family, including your parents, grandparents, children, and siblings are all eligible. And you can take any product that you need. You don't have to open an account for a specific product. And Wendy, I don't know if you wanted to take a moment. I know you usually mention some information.
Yes, hi, good afternoon, everyone. Thank you for joining this info session. So I am Wendy Mateo Arias, and I work at the Human Resources Department for the Workforce Development, and we partner with the benefits team to try to advertise these programs. This is a new initiative from the Wellbeing of Boston Children's, where we want to support our employees, not just on the health well-being, but also on the financial part of your lives. And that is why we have partnered with the Harvard University Employee Credit Union to be able to bring these different info sessions that will focus in different areas of our lives, but very important ones. So I hope that you are able to take advantage of the info sessions and also connecting with the team to be able to guide you and lead you through the financial path that you might need support on. And we are just here. If you have any questions for us, you can call our HR service center or look us up on the Children's Today under Human Resources. Thank you, Mitalia, and your colleagues for sharing this great presentation. I also learned a lot of new things in this.
Mi-
Thank you. Yes.
Migdalia, it's Helen again. I want to say one thing.
Oh,
I
yes,
just
go
wanted
ahead.
to say this. So you can get your mortgage from a lot of places. There's mortgage companies, there's big banks, there's credit unions. And like the mortgage companies are looking at you as a transaction. The credit union, Harvard Credit Union, we're looking to build a relationship with you and be a resource for you. So we don't have every product that exists. And if we don't have what you need, we'll let you know. We think this would be best suited for you. You know, maybe you should look here or look there. We're looking to be a resource, a trusted resource, and do the right thing for you. With the relationship as our focus, not just the mortgage transaction. That's why I encourage you to reach out to us, because we're here to give you, you know, good information. We're not just looking to do a transaction with you. We want more, you know. So just let you know that we're here for a resource too. We're not just going to tell you only what we offer. If we don't have what you need, we'll let you know that and give you some guidance there too.
Thank you, Helen. We do have, it appears we made, this may be our last question unless there are any other questions that folks may have. But actually, before I get to that last question, just a reminder, we will email everyone a copy of the presentation, which will include the recording. And if you do have any questions, as part of that email, you'll have Helen's contact information, and you can reach out to Helen or anyone else from our mortgage loan origination team at any point. So actually 2 questions that came in. One, I will just answer quickly before turning over the next question to Helen. Can I sign up for a member as a member online? Yes, you can. You can actually just go to huecu.org/join, and I will put that link. And Helen, what seems to be the last question is, how recent an installment loan like a car loan should be in order to help one's credit for a mortgage?
Well, I mean, it's really hard to answer it in a vacuum. If you have no other credit history but the car loan, you wouldn't even have a credit score for 6 months. But I would say at least, they'd like to see a 6 to 12 month history on it for it to really impact your credit score. I'd like that person to reach out just so I would know a lot, of other details, what else they have on their credit report. But an installment loan is different than a credit card, and it adds a lot of value because it does have collateral, so it's kind of in the same vein as a mortgage. And the expectation is that that loan would have a really good payment history, more so even than a credit. Hopefully all your payments are up to date, but we would want to see the car loan with a pristine credit history. It's sort of like a mortgage in some respect in terms of having collateral. So I would say 6 to 12 months.
And there was one other question that just came in. I'm in the process of selling and buying. Can HUECU assist me with that?
We can. I mean, that can be tricky. You might need a bridge loan. Do you need the equity from the house you're selling? Or can you qualify to carry them both? We'd need to crunch some numbers and see if we have the product for you, depending on where you are. When you're closing on the sale, there's a lot of questions I would have to ask you to give you, the right answer. But yes, we do jumbo, all kinds of loan programs here that I think we could definitely work with that.
Thank you so much, Helen, for all of your help, for jumping in. I know we had a little bit of technical difficulties at the beginning, and Helen was gracious enough, as always, amazing, to jump on and share her knowledge with everyone today. Those are all the questions that we currently have. I do want to remind folks to please take a moment, complete that survey. As Wendy reminded us, this is a new partnership, and we want to make sure that we're getting feedback from you to improve it and give you access to the information that can help you with your finances. And if there are any additional questions, you can also contact our mortgage loan originators directly at Home-Loans. I did get a couple comments about the survey not working, so we will send that link to make sure that it does work directly. And Helen, big thank you. I'm not sure if there's anything else that you want to say to close us out.
No, I just want to say thank you for taking the time out to listen, and please reach out to us. We're here for you to answer any questions you may have, and look forward to hearing from you. Thank you, Migdalia.
Thank you, everyone. And can't believe I'm going to say this, but happy holidays. Thanksgiving's next week. So I hope everyone has a good Thanksgiving and hope to see you at a future session. Thank you, everyone.